Hi everyone, this is Mrs. V. Chen. Welcome to my Form 5 Accounting lesson number 16, and today is 14th April 2020. Okay, so we are going to do some DSE question related to limited company, and the question is in 2019. Okay, so here we have the question. All right, so we are given the trial balance of Tracy Limited and then some additional information, and after that we have to prepare income statements for Tracy Limited and also the statement of financial position for Tracy Limited. Okay, so here I have Tracy Limited. This is the income statements for the year end. We always start with a nice heading. All right, so we start with sales and then we have gross profit, and this is the key answer for gross profits. So add revenue minus expenses, and this is key answer for net profits. Now remember, even though we have profit and loss appropriation accounts for limited company, but we don't show it here. So therefore, we need workings. So here is my workings later on. Okay, to show the extra parts of the profit and loss appropriation accounts. To start with the net profits in the income statements, which is same figure here, 51,080. Okay, all right, and after that, here we have statement of financial position for Tracy Limited. The first half, non-current assets, current assets, and then we get the total assets here for the key answer. And then also for the second half, we have equity and liabilities. So equity, and then we have non-current liabilities in this question, and then current liabilities. So finally, we have total equity and liabilities. So for this total equity and liabilities should be the same as the total assets of Tracy Limited. Okay, I'm going to start with the additional information. So number one, we have this closing inventory was 445,000. So I already have the position of closing inventory in the income statement, so I can simply put 445,000 here, right? And also closing inventory is a kind of current assets. So here I have my current assets, which is inventory, so 445,000. Okay, so therefore I have finished point one. Now in point two, I have this. So the company paid an insurance premium of 36,000 for the year end 31st March, and the whole amount was included in administrative expenses. So here we have administrative expenses, and remember, for limited company, when we have to disclose the financial statements for the public, we always show expenses in these three categories. So we have administrative expenses, selling and distribution, and finance costs. And one of the administrative expenses will be this insurance. Okay, so here is the timeline to analyze. So how should we adjust for insurance? So here is related to point number two. So our financial year ends on 31st December 2018. And then when we pay insurance, we always pay in a year, which is 36,000. But however, paying up to, this is the dates, that is 31st March 2019. So you can see the amount paid is too much. So we have prepayments whenever we have paying too much. Is that right? So therefore we have to decrease administrative expenses. All right, and this is called prepaid insurance. Okay, and the calculation will be 36,000 times 3 months divided by 12. So therefore I will have this prepaid insurance as a kind of current assets. Okay, so before I have this current assets, I also have trade receivables, and now I can show prepaid insurance, and which is 36,000 times 3 months divided by 12. So therefore I use my calculator here, and then I get 36 times 3 divided by 12. So I have 9,000 prepaid insurance. Okay, so since I have a lot of adjustments related to administrative expenses, so I'm going to show a separate working, all right, for the adjustment for administrative expenses. So here is working for administrative expenses, and then I get this figure 408,370 from the trial balance, which is before adjustments. Since this is paying too much, I have to minus prepaid insurance, okay, and which is 9,000. I use the brackets for a minus. Okay, now we come to point number 3. We have audit fee and director's fee were to be paid. That means we have these expenses not yet paid. Okay, and what do you think about the classification for audit fee and director's fee? So it should be a kind of administrative expenses. So therefore, this is my working for administrative expenses. Okay, we should add 2 more expenses not yet paid, so which are audit fee and director's fee. Okay, so how much is that? So 10,000 and 70,800, like that, because the income statement should be always the accrual based. So for this, it will be current liability in the statement of financial position, so that I have my current liabilities. So I will put trade payables first, and now I come to accrued expenses. Okay, now so far I have 2. One is audit fee, and then another one is director's fee. Okay, so next we have point number 4, saying that company's policy to depreciate equipment using the straight line method based on the estimated useful life of 10 years. So if you look at the dates here, now you look at the dates, accumulated depreciation, which is the beginning of 2018. So that means there is no depreciation provided during the year. Okay, and also you are given the classification for depreciation expenses, audit fees, and director's fees as administrative expenses. So even though you are not given the classification, you should know how we classify depreciation, audit fees, and director's fees. So these are the examples for administrative expenses. Okay, so therefore I need to provide depreciation. Okay, so here, so depreciation is a kind of administrative expenses, so I have to, okay, sorry, it should be add, right? Because depreciation not yet included, so I add the depreciation on fixed assets. Okay, now on non-current assets, so I need to find here, so equipment, so I have the costs. So this is the cost, 3,360,000. Okay, using straight line for 10 years, so each year going down by 1/10, so that I will just need to cancel 10336. Right. Okay, so this depreciation. So that's for the non-current assets. I have my equipment. Okay, and then we can show net figure directly, so that to start with. Okay, so to start with the equipment, which is the costs, so 336,000. Okay, minus the opening depreciation 116. Okay, so if you don't use bracket here, the depreciation, the value of non-current assets going down further by the depreciation provided for the year, so which is 336,000. Okay, so then you can use your calculator to get the net book value for equipment. All right, so minus 116. Okay, and then minus. Okay, so I have this as the net book value, which is non-current assets for equipment. Okay, now we come to the most difficult point in this question, which is point number 5. So we have this 4% debentures were issued on 1st of May, and here is the maturity dates. So starting from 1st of May up to 30th April 2020, so this is more than 1 year. So therefore, the classification for 4% debenture will be a kind of non-current liability. So if you go back to trial balance, so this 4% debentures 600,000 should be a kind of non-current liabilities. So therefore, I have in my statement of financial position non-current liabilities 600,000. I get 4% debentures. Okay, and then after that, we need to analyze step by step about the calculation of debenture interests. Paying half yearly on 30th April and then 31st October. Now here is the timeline. Okay, we do it step by step. So from the beginning of financial year up to the end, and then this is on 1st of May. Okay, so the double entry for issuing debenture and then debit bank. The purpose is to get more money, so that we debit bank 600,000, and then we credit 4% debentures. So since this is repayable more than 1 year, therefore it is a kind of non-current liability. However, what is the meaning of 4%? Whenever we have debentures, we must pay interest, and the interest paid to debenture holders always fixed at 4% in this situation. Okay, so therefore here is another double entry for interest. So we debit interest on debenture in the income statements, and it should be the debenture interest accrued. So let's go back to the diagram. So when should we start calculate interest? It should be starting from 1st of May up to the end. So the one incurred will be 4 months before here, so that I have 8 months incurred. Okay, and now let me get my calculator. So 600,000 times 0.04 times 8 divided by 12. So debenture interest should be 16,000 incurred, and then now we pay interest credit bank, and the dates for paying is on 31st of October, so that we pay how many months? We have paid 6 months here, 6 months. So this is 6 months, so this is 6 over 12, is it? Okay, so 600,000 times 0.04 divided by 2. Yes. Okay, so 12,000. You can see 12,000 is not enough for 16,000. So we owe people 4,000 as a kind of accrued debenture interests or interest on debenture. Now, this is the analysis of debenture interest or interest on debenture. Okay, now let's go back to trial balance. Okay, so can we find something in the trial balance which is related to that? So here we have debenture interest, and which is 12,000. So that means 12,000 was the debenture interest paid. And so how much should be incurred? The one incurred should be 16,000. So the one we paid just now, we have proved it, 12,000. So that means our calculation is correct. And therefore we have this accrued interest on debenture. Okay, so 60,000 debenture interest. So debenture interests is a kind of finance costs. Okay, so therefore we should have this 16,000 incurred. And how do we get that? So which is 600,000 times 4%, incurred for how long? Incurred for 8 months. So 8 months over 12. However, we don't pay enough, so that we still owe this 4,000 as a kind of, okay, accrued expenses. Okay, so here in the statement of financial position for the accrued expenses, I need to add another 4,000 for accrued debenture interests. Okay, so now we come to the final points related to limited company. So which is on 31st December, the board of directors resolved to transfer 40,000 to general reserve. So remember what is the meaning of reserve? Reserve means net profit put aside for future use. Okay, so we don't pay every dollar we earn to the shareholders as dividend. So this is a double entry, same as before. We put this in the profit and loss appropriation account, so which is 40,000, and then we credit general reserve. And then when you check the trial balance, we don't have any general reserve, so that we just create this general reserve. Okay, in the statement of financial position. So that's, I need to go to my profit and loss appropriation account. So this is profit and loss appropriation account transfer to general reserve by 40,000. All right, and then now I go to equity for, so equity, okay, I can have general reserve, which is, okay, 40,000. Okay, so we have finished all the additional information, and for the remaining thing, I just post all the items to the correct places accordingly. So here I have ordinary share capital, which is a kind of equity. So here in the statement of financial position, I have equity, which is ordinary share capital, so 2,465,000. So done. Okay, and as for equipment and accumulated depreciation, we have finished that before. And now we come to opening inventory. So where's my opening inventory? So here, cost of goods sold, opening inventory 344,000. Okay, so done. And trade receivable, trade payable, since we don't have any adjustments, so we just simply go to current assets, trade receivable, which is 136,000. And trade payable, current liabilities. So here, trade payable, current liability, 292,000. Okay, I just go to the correct places for the items, done. And then cash at bank, current assets. So here, cash at bank, 409,000. Okay, whole purchases and sales income statements. I have my sales. Okay, and then my purchases. Okay, however, what about this one? Gain on disposal of short-term investments. So we don't have any additional information mentioned about this point. So therefore, we need to analyze for this step by step. Okay, in the trial balance, we have gain on disposal of short-term investments, and also we have some short-term investment left, which is 816,250. So this will be a kind of current assets. So therefore, I have current assets, short-term investments. Okay, so actually what happened, what is the idea for the gain on disposal of short-term investment? That means originally we have more than this amount. Let's say this is something we don't know. Okay, but anyway, during the year, we have sold some of the short-term investment. So therefore you have the word disposal here. So to sell short-term investments, we get money, so that debit bank. And then since we have a gain, so that means the money we get here is more than the original amount. Let's say we credit short-term investment by X. Okay, anyway, since we have a gain, so which is credit gain on disposal of short-term investment, that means how much we get for disposal of short-term investment, it would be X plus 134,000. So this is the idea of this gain on disposal. of short-term investments because we have sold some of the short-term investments. But since we already have this credit, we already have this gain on disposal in the trial balance. Okay, that means the whole double entry has already been done in the books and being included in the trial balance as this gain on disposal of short-term investments. So this should be a kind of revenue to the income statements. Here, gross profit, I add gain on disposal of short-term investments, and which is 134,000. Okay, so we have done this, debenture interest done, and then administrative expenses. This is the figure before adjustments. So I go back to my working here, administrative expenses, and since we have no more adjustments, okay, so this will be the adjusted figure for administrative expenses. So I go to my income statement. So I put this 816,170. Okay. All right, now selling distribution expenses, so no adjustment. So I just copy this income statement, 475,750. Okay, done. And look at this retained profits. So this is the closing last year, opening this year. I go to my profit and loss appropriation account. So this is my profit and loss appropriation account. I add retained profit last year, so which is here, 186,370. Done. So done. So all done. Now I can close my income statements. Okay, and see whether I agree with the key answer or not. So I have this 344,000 plus, okay, and then minus 445,000. This is cost of goods sold. Okay, and see whether it matches with gross profit. Yes, correct. So we have this key answer before for gross profit, and then add revenue. Okay, and check this is total expenses. Okay, which is also correct. So therefore, 139. Okay, so this is net profit. So this net profit will go to workings, net profit, profit and loss appropriation accounts, transfer to reserve. So 11,080. So that add retained profit, opening one. Okay, so 197,450, which is the retained profit to go to here. Okay, equity and liabilities, equity. So therefore we have retained profits carry forward. Okay, 197,450. Okay, and then I can check with my calculator. Plus 197,450 plus this. Yes. Okay. Okay, and finally you can use calculator to close everything. All right, and then we get total assets for this much, and then total equity, which is non-current liability, debentures, and then close the accrued expenses. This is total accrued expenses, and then total current liability. Okay, and this is total equity and liabilities. Okay, so this is the DSE question for limited company in the year of 2019. Okay, thank you for watching my video. I'll see you next time. Bye bye.